Great. Thanks, Perry Ann. Really appreciate the opportunity to be here today. Welcome, everybody, to Meet the Pioneers, ETFs, custody, and new products paving the way in 2021. As Perry Ann said, my name is Richard Walker. I'm a principal at Deloitte Consulting and am the leader for blockchain and digital assets in financial services. I have the great honor today to moderate this panel. For the discussion, we have three pioneers in the blockchain and digital asset space. We have Lynn Alden, who founded Lynn Alden Investment Strategy, Nathan McCauley, co-founder and CEO of Anchorage Digital, and Jonathan Steinberg, founder and CEO of WisdomTree. Let me start with you, Lynn. Lynn, you founded and run a successful business advising retail and institutional investors across multiple asset classes. When did you start covering crypto? How different do you find it compared to the instruments or assets you already advised on? And what's happened to your business since you did start covering crypto?
I began covering it a little bit back in late 2017 because we had that large run up. It was pretty hot at the time, so I initiated coverage of it. But at the time, I was somewhat bearish on it, and so we didn't do a lot of coverage on it. And I kind of just provided caution to clients. And then we had that blow off top. We had the multi-year consolidation, and then it was really in early 2020, around that April 2020 period, that I initiated more consistent coverage on the space. And so, for your second question, it's sort of been a blend of like a commodity analysis along with a company analysis like equities, and that's because you're monitoring this digital asset, right? So Bitcoin or Ethereum, whatever the case may be, but then you're also analyzing the ecosystem around it. So some of the companies that are developing layers on top of it, that are applying it to different sort of applications, and some of them are business to business applications, some of them are consumer applications, and so basically a large part of covering the space is, in addition to providing some sort of price direction and things like that, we're also covering the things like the network effect and some of the applications that are happening in the space. And so one of the kind of the viewpoints out there in the mainstream media is maybe that there's not a lot of fundamentals to cover, that is purely speculation. Whereas in reality, when you actually get to know the space, there's a ton of different fundamentals that investors want to be kept up to date on and to given some sort of guidance on.
Fantastic. 2017, huh? Yeah. So it's the pioneer stuff just didn't happen yesterday. I think each of you have been at this for a while. Nathan, you co-founded and run the first OCC nationally chartered crypto bank. How did you end up starting a crypto custody business, a crypto bank? And how is what you do different than what other crypto custody businesses or crypto banks do today?
Sure, good question. It's funny. It sounds like Lynn and I came into the space at around the same time, 2017, as there started to be the first glimpses of institutional adoption of crypto. Kind of looked at the market and recognized that there was a need around institutional custody. Institutional custody that really solved two primary problems. The first one being secure custody of assets in a way that allows you to utilize those assets while they're held in custody, not just have them sit there inert, but actually be able to use and actively participated in, whether it's staking or governance or now the rising DeFi tide. So in 2017, we looked at this and said, people are going to want to hold their keys in a safe place to hold them, hold their assets in a safe place to hold them, but also be able to use those assets. And the second aspect of that is, particularly for the institutional use case, there needs to be a regulatory wrapper around the custody system. So you need to be able to hold it in a way that that there is government oversight over the custodian. Effectively, you need to hold it in a bank. And so we have looked comprehensively at the available charters, the available ways to hold that, and have decided that the best available charter under which you can hold digital assets is actually the federal charter through the Office of the Comptroller of the Currency. And so we were fortunate enough to be granted a bank charter this January after many years of effort and working on our chartering process. And now we're fully up and operational and supporting institutional clients and all of their needs around crypto custody. And then through affiliates, we run a trading business and a lending business as well.
Fantastic. Fascinating. And congrats. It seems like you got in just under the window because there's talk of slowing down the granting of new charters. So, Jonathan, we have advice in this space for institutions and individuals, retail. We've got platforms to support crypto products. You know, at WisdomTree, you're well known and trusted for ETFs, but you've also been in the crypto space for 5 years. How are you engaging with crypto, and how are you pioneering with crypto and crypto financial instruments?
Thank you, Richard. So I would say that you need to make a distinction between, let's say, crypto and blockchain and digital assets. I put it under the DeFi umbrella. So the first thing that we do under the DeFi umbrella, we're in the business of managing money. We manage about $75 billion, and we have crypto ETPs in Europe where we were able to get regulatory approval. So we have Ethereum and Bitcoin. We're applying for the same approvals in the United States, but the SEC has moved slower. How I got here was about 5 years ago. I had asked my team what could do to ETFs, what ETFs could do to mutual funds, and there was a belief that blockchain infrastructure could provide an efficiency and an enhanced user experience that was better than the ETF. And on the old rails, I would say the ETF is by far the best execution on the old rails. We have the least friction. So I found that my ETF business mapped well, but that I couldn't actually see my way through the SEC or the other regulatory bodies where I could get the approval that could unlock the potential of the blockchain. As a simple example, Bitcoin is global. Very, very few regulated financial instruments have global approvals. So we actually made an investment in a company called Securrency, which is an infrastructure company whose core competency was compliance. And so for me, it was for me to unlock digital assets, bringing into this ecosystem, this crypto ecosystem, some of the fundamental building blocks like gold and treasuries that could be useful for this existing ecosystem. I needed to find a way to get certain regulatory approvals, which really took a technology bent to it. So we're the largest shareholder in Securrency. And now we are pursuing with tremendous energy regulatory approvals. Like, we are the third largest gold manager in the world. Using blockchain technology, we're hoping to turn gold back into currency, save in gold, transact in gold, and in a DeFi manner, the ability to do peer-to-peer interoperability. So that's sort of how I got to this place in time.
Great stuff. Really fascinating kind of journey and awareness at the right time, it appears. Now, Lynn, just hearing what Jonathan's working on and his view of the investable asset market and some of the deficiencies that exist for the institutions you advise, will what you heard from Jonathan be attractive or fill an unmet need? Is this part of the evolution that you think is required to increase adoption?
Yes, I think a general trend I've seen among clients is that they do need a broader range of ways to access these products, as well as another thing they want is just general more kind of regulatory clarity about how different countries are going to treat these assets. So the combination of just basically acceptance of the assets among different countries. We've seen kind of flip-flopping on some countries in terms of how well they perceive these assets. And so basically there's that side of it. And then, like Jonathan pointed out, the SEC has been slower than some of these other countries in terms of allowing some of these products. And so I think, there are a number of institutions and say high net worth clients that want access to these types of products. And so we've been in an environment where, of course, retail investors can buy digital assets on exchanges. They can self-custody them, or they can leave them with those custodians. But then, for institutions that have more regulatory oversight, they want other ways to be able to buy or custody these products. And so we've been seeing that build out in the industry for a few years now. But for example, an ETF or other exchange traded products would be attractive for the space, as well as potentially applying blockchain to other types of assets like gold and things like that. And so overall, it's certainly a space that I think could benefit from more and more regulatory clarity, and that there is a big appetite for investors that when they want a non-zero position in some of these different assets, to have basically as broad a way as possible, so they whatever solution that they need for them, that it's available to them on the marketplace.
Excellent. It's great. Nathan, hearing about product and adoption, and thinking about your own business, is this what you had in mind when you built Anchorage? And how is Anchorage positioned to enable adoption and growth in this space?
Sure, it's a good question. So I think we're pretty well set up to enable adoption, particularly among institutional investors and institutional infrastructure. So you look at something like just say an ETF. When it does come time for the SEC to approve an ETF will be required to hold the assets underlying the ETF at a qualified custodian. We, as a federally chartered bank, will be very well positioned to serve in that capacity for some or many of those ETFs. In fact, we already custody for many of the funds, whether it's a private fund or an ETP that is investing in crypto assets as the underlying asset that are in that fund construction, and we will continue to do so. So certainly on the fund enablement side, we're very well positioned and kind of moving the ball forward there. There's a second layer to that, which is as we start to look at large banks and large financial institutions looking to build businesses in crypto, whether that's custodying of crypto assets, whether that's collateralizing of crypto assets, whether that is allowing for trading and lending of them. All of these kinds of infrastructural questions that large FIs are going to want to come into over the next several years, Anchorage is very well positioned to act as an enabler there. And as we start to look at very, very broad adoption, one of our theses is that many folks who want to take positions in crypto or in blockchain assets, whether it's Bitcoin or others, will want to do that through the existing trust relationships they have with their existing financial institutions, whether that's a bank, whether that's a broker, whether that's their existing fund manager or investment advisor. And so the more that crypto can be used as infrastructure for other FIs, the more we feel that adoption will be achieved more broadly across the whole ecosystem.
That's great. It's really interesting, like a bank for banks, and it's essential to just to achieve the scale and support the kind of operations necessary for adoption. Jonathan, it sounds like from an advice perspective, Lynn, confirms that there's great interest in products like you described, and Nathan's built a business and a platform to support scaling it. How do you see other traditional financial products changing, and how do you see new products developing going forward?
So I think there is tremendous interest. You don't, investing anything that goes to a $2 trillion market cap at its peak, and can show the kinds of returns that you saw last year, it attracts investor interest. What's interesting is that $2 trillion was achieved almost exclusively with retail, almost no institutional money whatsoever. Again, I think you're going to have to make distinctions in what we're talking about. So there are crypto exposures, and some 10 have any sort of real value or investor interest today. But over time, there will be more, I'm sure. And you have to pick the winners and the losers. Just like of public companies, there are 10,000 public companies, and probably only 1,000 of them have any research coverage. So that's just an interesting observation. But what I'm seeing is we're going to, when ETFs, I liken it to like ETFs. When ETFs launched, it was a very slow adoption rate. People were satisfied. They didn't know any better. they were satisfied with the way their money was being managed. So when I first saw ETFs, it was in 99 at 40 billion of assets in the wrapper. Today, 8 trillion. When Lynn talks about like the customers that are in the business today, these are really younger people very, very comfortable with technology. For us to take mainstream money away from ETFs, and ETFs, some of them have a 0 expense ratio today. So the friction is very limited. They're tax efficient. It won't be easy. So you need to have even better functionality. So I think a lot of that will be the peer-to-peer market that opens up. And so it'll be a combination. There'll be a weight that's going to bring people into this marketplace. Things like the central bank digital dollar will bring weight to blockchain infrastructure that will move the institutional money onto the blockchain. Retail is already there. And then you'll need things like regulatory approval for all the other instruments, equities, bonds, gold, whatever, onto this new ecosystem for it to fully evolve and to bring the mainstream money. So it's funny, $2 trillion is not mainstream money. And for the mainstream money to come on board, we need regulation, compliance, and all of the work, advice, and what Nathan is doing. All of the infrastructure has to be upgraded, and it is happening. I'm very encouraged by where I see the market today and where it's going.
Jonathan, the mainstream money, it's not mainstream money. If we think about the total banked financial instruments, or just total banked value, banks globally custody at the end of 2020 north of 400 trillion in assets. I think around 425 trillion. The crypto market is around 2 to 3, depending on what you include in that grouping. If we move all traditional financial products to have better functionality, you described, Jonathan, that we need better insight, better transaction speed, lower cost, better instruments. Nathan, if we're able to move more assets, so from the 2 to 3 today to the 425 that exist globally, what does this look like for the future of financial services? And does custody become the center of the universe, given that all instruments are digital assets?
I would, in some sense, start with this question by thinking back to what Michael Saylor was saying, and that there are aspects of Bitcoin that effectively make it the perfect financial instrument in many ways. And so, if we kind of take that as a hypothesis, and I actually do agree with Michael that it is nearly a perfect financial instrument. What are the characteristics of it that make it so great? Global nature, nationless nature, but also at a purely technical level, the ability to quickly and effectively settle in a global setting where you can never undo the books. So a lot of these are very, very interesting steps forward for assets, and really for just accounting and infrastructure in general. And it's enough of a step forward that it seems inevitable that many people will want to look at this and say, how do we apply the increases in efficiency that have been gotten through Bitcoin, apply that to other financial assets? And so one way to look at it is blockchain going to be just these decentralized nationless assets? Is it going to be an asset class? Or our hypothesis at Anchorage is this is going to be every asset class, and that every asset class is going to move to blockchains. And this is going to be in many ways the way of the future. So custody in its most pure form fades into the background. So I wouldn't necessarily say that it ends up being the center of the universe as much as it ends up being oxygen. It is the thing that allows things to move. It is the thing that allows things to flow. And so it is everywhere and nowhere simultaneously. And that's probably the best way to think about this. If we get all the gains that we're hoping to get out of blockchain-based systems, then infrastructure players like Anchorage will fade into the background and allow fundamentally the economy to flow and to investors' usage of the assets to be easy and seamless.
Lynn, are investors ready for this? I mean, do you expect to see continued increase in adoption of digital assets in retail and institutional portfolios? And, giving you the final word here, the last few minutes, what do you think it does to market dynamics? The real-time nature. Today, you trade a security and it settles in a couple of days, and then you might want to, trade it again. It settles in a couple of days, and just the global economy moves at a batch process pace. And what Jonathan and Nathan just described is very different. So back to the first question: Are investors ready for this, and what does this look like?
I think it depends on what type of investors you're looking at. I do think that there is a significant appetite for digital assets. And right now, despite the fact that they have reached, their peak over $2 trillion in total market capitalization, as the others have pointed out, that's not even real money yet. That's really kind of the tip of the iceberg. The percentage of people that own digital assets is still very low when you look at a worldwide basis. And so I do think that there is a pretty big runway ahead of us over the next several years of more and more individuals and institutions taking non-zero positions in some of these assets. And so they're going to need all these different custody solutions. And then what you say about, the settlement is very interesting, right? Because, for example, if you use just Bitcoin as an example, the average, time is about 10 minutes per block. And then it takes, 3 to 6 blocks to confirm, depending on how much confirmation time you're looking for. And so you achieve final settlement in under an hour. And then when you add other layers on top of that, like say the Lightning Network for smaller transactions, you can settle final settlement within seconds, for the most part. And so the interesting thing about blockchains is that, at least for the major ones that have development still ongoing, these are products that get better and better over time. And so, for example, Bitcoin's in the process of doing the Taproot update. The Lightning Network continues to have multitude of developers on it. Then you have the surrounding app ecosystem. And so basically, this is a very kind of exponential type of growth runway. So both in terms of the percentage of investors that want some exposure to that is likely to continue to increase over time. And then also just the number of applications and businesses, whether it's applying blockchains to other assets, whether it's using blockchains for payment systems, like we're seeing with, say, Strike, for on the Bitcoin network, and some of the things that they're doing down in El Salvador, but also applying it in developed markets as well. And so when you kind of see that sort of thing build out, there's going to be tons of opportunities, also tons of disruptions. But I think the main thing is that we just need more and more regulatory clarity and more infrastructure to allow just easier access and less friction to access all these different technologies and assets.
Well, that wraps our panel. I want to thank Lynn, Nathan, Jonathan for being pioneers, for sharing your experience and your insight, for taking us into the future so we can, really get a sense of where your head's at with regard to what's going on, how you are pioneering, and what the future holds. So with that, thank you very much, and enjoy the rest of the Parallels conference.
Thank you.